You know the drill. You're watching the evening news, and the anchor puts on their serious face and announces, the market took a massive hit today. Or, they smile and say, record highs. You hear these numbers practically every single day. But have you ever actually stopped to ask what specific market they're talking about? Like, what does that even mean for your wallet? Well, let's look under the hood. So what does the market actually mean? It's a really great question, because here's the secret. There is literally no single magical entity called the market. When reporters throw that phrase around, they're actually talking about a bunch of completely different scorecards. And depending on which scorecard you're looking at, you're going to get a totally different picture of the economy. To really get this, we've got to talk about what finance folks call a stock index. Honestly, just think of an index like a giant thermometer for the economy. If you want to know if the weather outside is running hot or cold, you check the thermometer, right? Well, an index does the exact same thing, but for a specific group of publicly traded companies. Instead of agonizing over thousands of individual stocks one by one, an index just bundles them all together to give us one simple, easy-to-read number.
Okay, let's dive right into this. We're going to look at the big three indices that basically dictate the daily financial news.
First up, the Dow Jones Industrial Average, or, just the Dow. It's been around forever, literally dating back to 1896. But here is the wild part. The Dow is incredibly small. It only tracks 30 companies. That's it. Just 30 major blue-chip American companies. So it's this super exclusive club of household names, but it is absolutely not the whole stock market. Now, contrast that tiny little 30-company club with the S&P 500. As you can probably guess from the name, this index tracks 500 major American companies, and it covers businesses across all of the major sectors of the economy. Because of its massive size, the S&P 500 represents roughly 80 to 85% of the total U.S. stock market. So when the pros want a broad health check of the overall economy, this is usually the thermometer they're checking. And then hit them with the NASDAQ composite. If you want sheer scale, this is your guy. The NASDAQ tracks over 3,000 stocks. 3,000! And it definitely has a specific reputation. It's basically the innovation powerhouse. While it covers a bunch of sectors, it's really famous for being heavily focused on tech and growth companies.
And this brilliantly illustrates exactly what I mean. Just look at this breakdown. Over 50% of the entire NASDAQ is made up of information technology companies alone. Just tech. This is where you're going to find massive real-world American innovators like Apple, Amazon, and Tesla. Basically, if tech is having a great day, the NASDAQ is going to soar. But if tech struggles, the NASDAQ takes a big hit.
But here's what most people don't know. And honestly, this is probably the biggest beginner myth in finance. People just assume that all these scorecards measure companies in the exact same way. Like, they think a dollar gained in a Dow company equals a dollar gained in an S&P company. But no way. They are completely different animals.
So let's talk about the big weighting misconception and how these indexes actually work behind the scenes.
The real secret to understanding the financial news lies in this hidden mechanism called weighting. See, the Dow is what we call price-weighted, which literally means the Dow only cares about a single stock's share price. That's the whole shebang. Meanwhile, the S&P 500 and the NASDAQ, they're market cap-weighted. They don't just look at the price of one single share, they care about the total overall size of the entire company.
Let me break down market capitalization, or market cap, real quick. It's just the total value of a company. You figure it out by taking the number of shares out there and multiplying it by the current share price. So, in the S&P 500 and the NASDAQ, a massive trillion-dollar company is going to have way more influence than a smaller billion-dollar company. And honestly, this is widely considered the fairest way to represent a company's true economic footprint.
Now, what's really interesting about this is the wild discrepancy it creates. On one side, the biggest companies by total size, your Apples, your Microsofts, your Amazons, they totally dominate the S&P 500. But on the other side, United Health Group dominates the Dow. Wait, why? Purely because its individual share price happens to be really high. Actually, fun fact, Apple is in the Dow too, but because Apple's per share price is lower, it has way less influence there than United Health.
And this right here reveals the ultimate flaw with price weighting. In the Dow, a stock trading at $400 a share moves the index 4 times more than a stock trading at $100 a share, even if that $100 stock represents a way bigger, much more important company. So the Dow can sometimes give you a really skewed picture of the real economy, just because it's being pushed around by a few high-priced shares.
All right, bringing it all together, let's get to the ultimate key takeaway. The absolute most important thing you need to remember from this explainer.
If you want to understand the news and actually invest smartly, you've got to keep this in mind. The market is not a single objective truth. Your view of the economy depends entirely on whether your thermometer measures per share price, like the Dow, or total market value, like the S&P and NASDAQ. So next time you hear the market is up or the market is down, always ask yourself, wait, which market?
So which market are you going to watch tomorrow? Will it be the exclusive little club of the Dow, the broad benchmark of the S&P 500, or the tech-heavy NASDAQ? If you found this explainer helpful and you want more clear, no-nonsense insights, make sure you hit that subscribe button right now. And hey, don't stop here. Click on our next explainer to keep leveling up your financial knowledge. See you over there.